Hello, and welcome to our next NAP. Thank you so much, everybody, for joining me in this NAP video. NAP stands for Nonprofit Auditor Points, and my name is Irina Orishkova, and I'm your nonprofit auditor. I have a small CPA practice in downtown Oakland, and we specialize in serving nonprofit organizations. Specifically, we provide assurance and tax services for nonprofits. So we do audits and reviews. These videos designed by me to help nonprofit community to demystify some areas that nonprofit encounter during the audit and address the most critical and confusing topics related to audits and accounting. So let's start. A friendly reminder that these videos are not authoritative. They just designed by me just to be educational. So if your nonprofit have any specific questions, please contact your own CPA. You can contact me, or you can contact your other financial personnel. And today I want to talk about management recommendation letter that auditors issue at the end of the audit. Sometimes that letter can be also called letter of significant deficiencies, material weaknesses. But overall, that would be recommendation letter that auditors provide at the end of the audit to the nonprofit. Let me describe the purpose of that letter, why auditors do that, and how a nonprofit should view that letter. Auditors, during the regular financial audit, do not issue an opinion on the organization's internal control. However, during financial audit, auditors are responsible to understand the system of internal control of the organization. And when the auditors do the work, we come across financials mistakes. We do talk to accounting personnel, executive directors, board members, and we understand overall organization's policy procedures. We understand the policy and procedures around each audit areas. That would be cash disbursement, like expenses, cash receipt was as a revenue, and payroll, fixed assets, investments, maintaining restricted net assets, and so forth. We understand what the organization does in order to record these areas correctly. So we do, as the auditors, we come across the issues that nonprofit has and during the audit period. And we consider the organization's internal controls in order to design auditors' procedures for testing. That's for our internal consideration. We do not, as the auditors, we do not issue an opinion on the organization effectiveness and efficiency of internal control. We do not, but we do consider. And because the standards require us to understand and consider, we have to issue the letter, recommendation letter, at the end of the audit, telling nonprofit organization that even though we only issue an opinion on the financial numbers, that they're not materially misstated, during the audit, we come across some areas that we believe can be areas for improvement. And we have to, standard require auditors to list those findings as either deficiency, significant deficiency, material weaknesses, or other matters. And we put them together in a management recommendation letter. Just to make sure that we understand this is a letter that comes from auditor to the organization to communicate our internal findings. This is not external letter. During regular financial audit, based on general accepted principles in United States, this letter, it's internal letter communication to management and to the board only. So we, as the auditors, we issue a letter where we're stating that during the audit, we did not audit your internal control, but we became aware of some areas, and we want to communicate to the organization what those areas are. And we gradated, we put a category saying we identified some deficiencies. And what are deficiencies? Deficiencies, it's let's just say problem, or not, so some areas of internal controls that not well designed or implemented, that does not allow the organization to correct mistakes in timely manner. Mistakes and errors will happen, but the system of internal control should be designed in a way that management can catch these mistakes and fix them themselves. If the system of internal control is not designed in a manner that management can catch mistakes and errors, that's a deficiency. And if a deficiency become persuasive and repetitive, it can become significant deficiency, which is more. And if that deficiency can result in material mistake, material we mean that financials, organizations' financials can be materially misstated. If these mistakes are not caught on time by management, it becomes material weakness. So it's deficiency, significant deficiency, and material weakness. One point I want to mention, that materiality, it's not for the organization to consider. It's from the auditor. We as auditors, we assess materiality every time when we do audit based on a period that we're doing audit. So once again, we as auditors identify all the deficiency during the audit. Then we put them in a different brackets. It's either deficiency, significant deficiency, or material weakness. And we issue a letter, that internal letter, only for the organization's management and the board. It does not need to be provided to external readers. And we list those deficiencies, and we explaining specifically where this deficiency is and what the nonprofit needs to do in order to mitigate or address that deficiency for future periods. For example, we would say, if we, when doing cash, we noticed that the organization has a lot of their cash deposits in one financial institution, let's just say $1 million for at the end of the year. We know that federal government provides insurance per entity per financial institution up to $250,000 a year. If the organization has $1 million in one financial institution, let's just say Bank of America or Bank of any financial institution, then we do say that about $750,000 was uninsured, unprotected at the end of the year. And we would recommend a nonprofit either separate their deposits, cash deposits, in a different financial institutions, or within your financial institutions, invest in certificate of deposits of other financial institutions that also have a separate FDIC insurance, federal government insurance. So we will provide recommendation. But this recommendation, it's not an example of material weakness because it's not material mistake. This deficiency in internal control does not result on financial statements to be materially misstated. So it might be just a deficiency, or it could be significant deficiency depending on auditor judgment. Other example, let me give you an example of material weakness. For example, if the auditor performed a financial audit and noticed that organization did not implement a new lease standard, says 145, but the organization has a substantial lease that 10 years old, then 10 years long, and it resulted in adjustment about $300,000, and it was material adjustment for nonprofit. Therefore, that would be material adjustment, and that's for sure indication that there is a material weakness exists, that the organization's internal policy and procedures not design an effective manner where the nonprofit can adhere to new standards and properly record leases, long-term leases. So the words material weakness, significant deficiencies do sound very harsh. These words are not developed by auditors. These are words that we have to use based on the standards. So I apologize for the words. However, nonprofits should see this letter as a very helpful tool. First of all, like I mentioned before, it's internal letter. Therefore, nonprofits can take an opportunity and use that letter to understand where their systems of internal controls can be improved and implement make adjustments to internal control and implement the recommendations. Also, this letter can include other recommendations that are not necessarily deficiencies or significant deficiency. And sometimes auditors would put recommendations such as, for example, the nonprofit is very small and run by one person, like one executive director. Therefore, as the auditors, we understand that nonprofit, it's very difficult to design effective system of internal control with the proper segregation of duties. Therefore, auditors would indicate that nonprofit needs to continue involving the board members to their system of internal control, so there is sufficient oversight and some segregation of duty that will minimize possibility of mistakes and errors. Therefore, this letter can also be used by management, by executive director, to communicate to the board members, to make them understand why it's very critical for the board members to continue to be involved in day-to-day operations. Therefore, this letter serves many purposes. From the auditor standpoint, we are required to communicate our findings during the audit in a letter. Some other recommendation can be done orally, but even if we do orally, we still need to document in our work papers that we come across and we communicated to the organization our findings. Significant deficiencies and material weaknesses have to be documented in writing and provided to the organization. Nonprofit can address those findings and put their answers. However, as auditors, we do not issue an opinion on your responses, on the organization responses. We do read them. If the organization needs guidance from nonprofit, how to address those findings, auditors would more than happy to help. However, auditors do not provide an opinion on the organization responses. And typically, responses are done after the period where the auditors audited. So as an auditor, without specific procedures, cannot address an opinion whether these systems are actually effective and working. Sometimes organizations would say, oh, we already implemented these recommendations, But depending if they were implemented after the period of the auditor review, these recommendations are still true and needs to be documented in writing because they were addressed by the organization after year end. To conclude, recommendation letter, it's a wonderful tool for both, for auditor and for the organization and for the board. For auditor, it serves requirement that we need to adhere as an auditor to document our recommendation to the organization. For the management, it's a great tool to see where they can improve and do better and make sure that they are implement best industry policies and procedures to stay current with the regulations and laws. And for the board, it's a great tool to understand where the organization is lacking or in terms of internal policy and procedures or doing great. So this is a great communication tool to make sure that all parties that involved in the audit process understand overall organization's position from the standpoint of policy, procedures, and accounting systems. What I would recommend to the management and the board, do not be afraid of that letter, regardless of the harsh words that are used. This is an internal letter, and it's actually great adding in product to the audits that board and management can use to make their nonprofit systems of internal control even more robust and more effective. Thank you so much. I'm very grateful that you were here with me for this nap and looking forward to see you in my future naps. Thank you and have a wonderful day.